There's an institution that has stood for 112 years, an institution that survived the Great Depression, 2 world wars, the 2008 financial collapse, and a global pandemic. An institution so powerful that when it speaks, stock markets move. When it acts, the price of everything you buy shifts. When it bends, the entire global financial system feels it. That institution is the Federal Reserve, and right now it is under the most ferocious assault in its entire history. Not from a foreign enemy, not from a market crash, from the President of the United States himself. Today is February 20th, 2026, and what has unfolded over the past several weeks may go down as one of the most consequential political and economic confrontations America has ever seen. 3 forces are now on a collision course: Donald Trump, Jerome Powell, and the Supreme Court of the United States, and the outcome of that collision will determine the direction of the American economy for the next decade. Let me take you through exactly what happened, because this story is not just about politics. It is about your savings, your mortgage, your job, your future. Let's go back to where the fuse was first lit. When Donald Trump returned to the White House in January 2025 for his second term, he came back with one economic obsession: interest rates. Trump believed, and continued to believe, that the Federal Reserve had kept interest rates too high for too long, that the Fed's caution was strangling economic growth, inflating the government's borrowing costs, and standing in the way of the kind of explosive expansion he wanted to deliver. The Fed, under Chairman Jerome Powell, saw things differently. Inflation, while cooling, had stayed stubbornly above the Fed's 2% target for years. The unemployment rate was near its natural floor. The economy was not struggling, and Powell, a man known for his cool demeanor and institutional discipline, refused to cut rates just because the president demanded it. That refusal lit a fire under Trump that never went out. The criticism started in private, then it moved to social media, then it went nuclear. Trump publicly called Powell a fool. He threatened to sue him. He threatened to fire him. And then, in January 2026, the Trump administration did something no administration in modern American history had ever done before. The Department of Justice served the Federal Reserve with grand jury subpoenas. A criminal investigation was launched against Jerome Powell himself, ostensibly over cost overruns in the renovation of the Fed's Washington headquarters, a $2.5 billion renovation project that had been ongoing for years. Powell, who had spent months absorbing the attacks in silence, finally spoke out. In a video statement that stunned Washington, he said the investigation had nothing to do with building renovations. Those were pretexts. The real reason, he made clear, was that the Federal Reserve had set interest rates based on economic evidence rather than on presidential preference. He said that public service sometimes requires standing firm in the face of threats, that he would continue to do the job the Senate confirmed him to do, with integrity and a commitment to serving the American people. The war had officially begun. But Powell was not the only target. Months earlier, in the summer of 2025, Trump had made a move that no president in American history had ever attempted. He tried to fire Lisa Cook, a member of the Federal Reserve's Board of Governors appointed by President Biden. The stated reason? Alleged mortgage fraud. Cook, the administration claimed, had listed 2 different homes as her primary residence. Cook denied the accusation entirely, but almost nobody in Washington believed that was the real reason. Cook had been one of the governors who supported Powell's decision to hold interest rates steady, exactly the policy that infuriated Trump. The math was simple. If Trump could remove Cook and then replace her with a loyalist, he would be one step closer to controlling a majority of the Fed's 7-member board. And if he controlled the board, he could influence interest rate decisions directly. Cook fought back. The case went to court. The courts initially blocked her removal, and then it went all the way to the top, to the Supreme Court of the United States. On January 21st, 2026, 1 month ago today, the Supreme Court heard oral arguments in the case of Trump versus Cook, and the stakes could not have been higher. Every living former Federal Reserve chairman, Alan Greenspan, Ben Bernanke, Janet Yellen, signed a joint brief urging the Supreme Court to protect the Fed's independence. Former Treasury secretaries, former chairs of the White House Council of Economic Advisors, economists from both parties, all of them filed briefs arguing that allowing the president to fire Fed governors at will would shatter the central bank's credibility and trigger chaos in global financial markets. J.P. Morgan Chase CEO Jamie Dimon, not a man given to hyperbole, warned publicly that political interference with the Fed would have what he called reverse consequences, likely raising inflation and increasing borrowing costs across the entire economy. Harvard law professor Daniel Tarullo, a former Fed governor himself, called this case one of the most important decisions the Supreme Court will make in this era. He said, Cook is the test case for whether there is any limit to presidential power over the institutions that govern American economic life. And yet, the Trump administration pressed forward. The Solicitor General argued before the 9 justices that the president has the constitutional authority to remove executive branch officials, including Fed governors, for cause, and that the courts should not second-guess what that cause is. Here is why that argument matters so much. For over a century, the law has said that Federal Reserve governors can only be removed for cause, meaning actual misconduct, negligence, or criminal behavior. That protection was specifically designed to insulate the Fed from political pressure, to ensure that the people setting interest rates were making decisions based on economics, not on what any given president wanted for short-term political gain. If the Supreme Court sides with Trump, that protection effectively disappears. Any president could fire any Fed governor, manufacture a pretext, and dare the courts to stop them. The independence that has made the Federal Reserve the bedrock of global financial stability for more than a century would be gone. So, what did the justices actually say? The arguments lasted 2 full hours, and what emerged surprised many observers. Conservative justices, including Brett Kavanaugh and Chief Justice John Roberts, expressed serious concern about the economic consequences of Trump's position. Kavanaugh warned the Solicitor General directly about the implications of weakening Fed independence. Roberts echoed those concerns. Justice Amy Coney Barrett, another conservative, raised the risk of market disruption if the court moved too hastily. She asked Trump's lawyer directly, "If there is a risk, doesn't that counsel caution on our part?" The court's liberal justices were equally skeptical. Justice Ketanji Brown Jackson noted there was no evidence Cook posed any immediate harm to the public that would justify her emergency removal. Legal analysts who watched the arguments came away with one clear impression. The Supreme Court, across ideological lines, was deeply reluctant to hand Trump the power to dismantle Federal Reserve independence. Fed Governor Cook herself said it plainly after leaving the courtroom. This case is about whether the Federal Reserve will set interest rates guided by evidence and independent judgment, or will succumb to political pressure. But a ruling has not yet been issued. It is expected by the end of June 2026. And until that ruling comes, the uncertainty itself is already doing damage. Because here is the part that does not make the front page: the economic consequences that are already unfolding right now, in real time. Economic analysts have pointed out that Trump's sustained assault on the Fed has already contributed to an 80% increase in gold prices over the past year. The US dollar has depreciated by 10% over the same period. These are not abstract numbers. A weaker dollar means everything you import costs more. Energy, electronics, food, medicine. It fuels the exact inflation that Trump claims to want to fight. And the bond market, the $30 trillion market for US Treasury debt, has started sending warning signals. Long-term interest rates have not fallen as much as they should have given the Fed's recent rate cuts. The gap reflects something alarming. Investors are demanding a higher premium to hold American debt, not because they doubt America's ability to pay, but because they are starting to doubt the credibility of the institution that controls the value of the currency those payments are made in. Some of the world's largest sovereign wealth funds have reportedly begun pulling back from U.S. treasuries. If that trend accelerates, the cost of financing America's $36 trillion national debt rises, and that cost is passed directly to American taxpayers, in the form of higher interest payments that crowd out spending on everything else the government needs to do. Former Fed officials from across the political spectrum described it bluntly in a joint statement. This is how monetary policy is made in emerging markets with weak institutions, and it has highly negative consequences for inflation and the functioning of economies everywhere it has been tried. Now, let's talk about the timeline ahead, because this story is not over. It is entering its most critical phase. Powell's term as Fed chairman expires in May 2026. That is less than 3 months away. Trump has already said he has a replacement in mind. The leading candidates include Christopher Waller, a current Fed governor, Kevin Warsh, a former Fed governor widely seen as more aligned with Trump's preferences, and Kevin Hassett, the director of the National Economic Council. Trump has been explicit. The next Fed chair must believe in lower interest rates. By a lot. His exact words. And that anyone who disagrees with him will never hold the position. This statement has alarmed economists across the political spectrum. Because the Fed chair is not supposed to believe in any particular level of interest rates. They are supposed to respond to data, to evidence, to the actual economic conditions of the moment. A chair appointed to deliver a specific policy outcome, regardless of what the data says, is not an independent central banker. They are a political operative holding the most powerful economic tool in the world. And Powell, even after leaving the chairmanship in May, could technically remain on the Fed's board of governors until 2028, unless Trump finds a way to remove him too. Which is exactly what some legal experts now believe the administration intends to pursue, depending on how the Supreme Court rules in the Cook case. Let's step back and ask the question that everyone is dancing around. What actually happens if the Federal Reserve loses its independence? The answer, based on documented historical evidence from countries where this has happened, is not speculative. It is a pattern. When a central bank becomes politically controlled, interest rates tend to be set too low for too long. Because politicians always prefer cheap money and economic stimulus, even when inflation is already rising. Too low rates fuel asset bubbles. They inflate stock prices and real estate far beyond their true value. And then, when reality reasserts itself and the bubble pops, the crash is catastrophic. Far worse than if the central bank had been allowed to do its job from the beginning. We have seen this movie before, in Argentina, in Turkey, in Venezuela. In each of those countries, governments seized effective control of monetary policy and used it as a political instrument. The consequences were devastating. Hyperinflation, currency collapse, economic depression, the destruction of the middle class. America is not those countries. The US dollar is the world's reserve currency. The Federal Reserve is the most credible and most powerful central bank in human history. America has structural advantages that those nations did not have. But credibility, once lost, is almost impossible to rebuild. And what is happening right now, the criminal investigations, the firing attempts, the relentless political pressure campaign, is eroding that credibility in real time, quietly, invisibly, in the spread between treasury yields and expectations, in the flight to gold, in the drift of the dollar. Every week this continues, the damage accumulates. Here is where things stand today. The Supreme Court has heard the arguments and will issue its ruling by summer. The outcome will either confirm that the Federal Reserve's independence is constitutionally protected, or it will open the door to the most radical restructuring of American monetary governance since the Fed was created in 1913. Jerome Powell's chairmanship ends in May. Trump's nominee will reshape the institution from the inside, and that reshaping will echo through the economy for years to come. Markets are watching. Investors are hedging. Central banks around the world, in Europe, in Asia, in the Middle East, are quietly reassessing how much faith they should place in the US dollar as the foundation of the global financial system. And the American people, most of them have no idea this is happening. They see the headlines about personalities and political battles. They do not see the slow-moving earthquake underneath. This is the moment that history will remember as either the near miss that was avoided, or the turning point that nobody saw coming until it was too late. The time bomb is ticking. Whether it detonates depends on 9 justices in Washington, on a handful of senators with the courage to break from their party, on markets that have the nerve to send a clear enough signal to make the administration think twice, and on people like you, who are informed, who are paying attention, and who understand that what is being decided right now is not just about Jerome Powell's job. It is about the kind of America that exists on the other side of this moment, about whether the institution that controls the value of every dollar you earn, every mortgage you carry, every retirement account you're building, remains guided by evidence and expertise, or whether it becomes one more instrument of political power. That question is on the table right now, and the answer is coming. Stay informed, stay engaged. Because when the ruling finally comes, you will want to understand exactly what it means.